In this video, traders, we are going to look at some of the longer term implications on trading and investing after coronavirus. Stick around. Hey guys, very warm welcome to you. Alright, so these are my thoughts and ideas on some of the longer term implications on trading and investing after we come out the other side of this coronavirus. So as I'm filming this, we're right in the thick of it. Market's almost at lows, we're bouncing a little bit, but day by day it's just changing. Cases are spreading. We're kind of really right in the heart of this. So whenever you're watching this, who knows what's going to happen over the next few months or even a few years. But anyway, question came in from a subscriber. I appreciate all your comments, guys, on the videos. Likes, shares and stuff, and some great ideas as well for video content. And like I say in all these videos, I definitely don't have all the answers. These are just my ideas and thoughts, and hopefully I can share some experiences as well. I've been trading through some of the other crises and catastrophes and all this kind of stuff, and maybe kind of add some value in that way. But you've got to stay safe out there, guys, whether you're trading or crazily enough, even out on the street as well now. Okay, so let's get back to it. Some of my thoughts on how we might be some of the things that might change and adjust as we go forward from this. Longer term implications. First thing I think is that algo trading may be reviewed. Now this has been the quickest move from highs I believe we've ever had. We're going into bear market territory, pretty much the quickest from any crisis or financial catastrophe we've ever had. And people are going to be blaming the algos for this. Algos always get the blame, don't they? But there might be some truth in it. The liquidity providing aspect of it, I've mentioned this before, and I'm definitely not going to, this is not a I told you so thing at all, because I don't think anyone could have seen this coming. I have talked about one of the biggest risks to getting out of anything is the liquidity aspect, and everyone kind of knows this, and I think this has been exaggerated a lot. We've got no one really wanting to buy. We kind of slowly went down because people were buying the dip. And when they realized that, hey, this isn't the dip to buy, and it was, we don't know what's going to happen, that bid liquidity across anything just completely dried up. And so, of course, when you've got everyone trying to run out of the door without those buyers there, we just get these, massive moves. And so I don't know whether after this there'll be a bit of a review on algorithmic trading, on maybe liquidity providing. They might even overhaul something to do with people being forced to provide liquidity. Maybe they'll. I don't know how it works. I'm just kind of speculating here, but I think there'll be, as always, some kind of deep dive into algo trading. We'll get to some kind of stuff that might affect us a little bit more in a moment. The buybacks issue, they're talking about bailing out some of the industries, and all these guys have spent their spare cash buying back stock. I think that might be restricted. There'll be new sectors and companies popping up. Definitely going to be loads of different sectors and different companies operating different ways. We're already seeing now in other countries like temperature sensors monitoring people as they go into venues and stuff, and basically flagging up anybody who's got a high temp. Whether that's the right thing to do, I don't know. But we're going to find maybe, all these new different companies popping up that's dealing with a health issue or a screening issue. And so, there will be trading opportunities from those if you're trading stocks. Ironically, fewer IPOs. I think maybe that froth might die down a little bit. Hedging my bets a bit here, like a true trader. We're either going to be in a range-bound environment for a while where the fear of it maybe coming back again might stop people buying too much, and we might end up kind of ping-ponging around. I still think we're going to be reasonably volatile, but we might end up kind of being in a range for a long period of time, as the threat of the virus coming back is always there. But yeah, people are buying a little bit. Might be kind of stocks that are just completely hammered, and others that are doing, and it might be that kind of yin-yang effect. Or because we've now got interest rates that are just slammed to the floor, we could just absolutely rock it. Because if it passes, and listen, no one knows the answer to this, we've got time will tell. If it all passes, the economic damage isn't too bad, companies are getting hit, or maybe if it is bad, but it's a short, sharp shock, and we pop back quickly with that low interest rate environment, and maybe, I don't know, maybe consumer spending suddenly ramps up because people go, oh, I'm alive, we got through this, off we go, and all happy and all spending. I don't know, again, that's a guess. We could just absolutely fly, and we could be straight back to highs and more again. I don't know which side I err on yet. I haven't kind of made my thoughts and decisions on that. Time will tell, and it's very much to do with what's going on with the virus and how it's contained, all that stuff. It's very much a non-financial issue, that. But those are two things I've got in my mind of how we actually come out of this. Now, the third one, of course, is that that we just completely go into a longer bear market. We're kind of 80% off highs, but I think that would be if we had a really horrible kind of prolonged spell through this, and we didn't have an end in sight, and people just didn't care about investing. Companies were just folding. It just went into full protection mode. I hope we don't go there, obviously, but those are kind of some of the things. But I'm going to do another video where I talk about some perhaps different ways we could come out of this more specifically later on. So make sure you're subscribed and all that kind of stuff, guys. I think we might come with stricter margin. I think as retail traders, depending on where you are as well in the world, some of the margins are strict, some not so strict, and leverage and stuff, that might be tightened up a bit. We'll see how that goes. It might be at the very bottom of the list of things that people care about now, which might save retail traders. They might be like, listen, if you want to carry on and trade with full margin, you just get on with it. Maybe that'll be the way it goes. The government's all the governments have got far more on their plate to worry about, than retail traders trading FX or stocks or whatever you. I think we'll have more rules as well placed on hedge funds. A lot of funds have been leveraged up, and they have kind of blown up, and they've probably exaggerated downside in some stuff because they're the ones that have just had forced selling. I think this forced selling hasn't helped matters, but I know it's a free market, and of course I'm in favour of a free market and stuff, but maybe the government's not so much when it means that the whole market's getting hammered and the economy is getting hammered because of it. So maybe there were some more restrictions on hedge funds. What else do I think will come out of it in terms of kind of retail trading? At the end of the day, I think the circuit breakers will change. I think we may have some amendments to that. I think we're not out of the woods yet by any stretch of imagination, but we could have easily had we've had down limits, we've had down circuit breakers, we've had up circuit breakers, lock limit up, we don't have an up circuit breaker, lock limit up, we had lock limit down, we've had when the market's open the circuit breaker down. I've done a video in more detail about that. We haven't hit the 13 yet or the 20, but we've had a position where I thought we could easily hit minus 20, multiple days in a row just from sheer panic with no buyers, and that might be overhauled. They might look at that and go, hey, we got away with that. We didn't really hit that. I mean, who knows? Tomorrow we could have, I don't know. We're such a fluid environment at the moment, so much stuff going on. But I think they might change that. I think they might adjust the way the circuit breakers behave. They might also kind of widen them, maybe the limits perhaps on the S&P under certain circumstances to the upside maybe, or I don't know. I just think they need to be tweaked a little bit. I don't think they've been tested as much as they ever have as they are right now. We're hitting limits almost daily. It's not a normal trading day if we're not hitting not lock limit up or lock limit down before the open and then testing a circuit breaker and bouncing off it. It's crazy. So I think they'll be adjusted a little bit. From a retail perspective, guys, from kind of our perspective in trading, will much change? I still think volatility is going to be high unless there's some real restrictions that just clamp down on any speculation, but I can't see that, especially not from the States. And UK as well, coming out of EU, I believe we're more aligned with the US on that kind of way of things, the free market, the capitalism side of things. So I think that will ultimately change. Ultimately won't change. I think the volatility will just pick up and it will stay high for a longer period of time. I think there's plenty of opportunity across all different markets. I think we're in for a long period of very good trading. If it's too volatile for you now, fine. As I said it before, it's not a problem. I think that we'll die down a little bit, but I think there'll be plenty of opportunity. As countries kind of position, and I think there's so much to come out of this that I think it can't do but really impact us as traders in a good way. There's a bit better to choose the market you want to trade. We're trading FX, we're trading commodities, we're trading individual stocks. There'll be so much to choose from. So it's a good time now to really dial in your thoughts on your strategies, the way you play stuff, all that kind of thing, because ultimately, guys, we're probably in for a good cycle of good trading environment. I hope that's right. I could be wrong with this. It could be dampened right down, but I hope not. I think from a trading perspective, and again, this video is about trading perspective. Of course, we've got health considerations to think about, but just sticking with trading for now, I think that it'll be a good trading environment going forward, assuming we come out of this okay, and assuming there's not too many restrictions placed on speculation. So anyway, take care, guys, whatever you're doing. Bye-bye.